I wanted to share a little bit with you about reverse mortgages. So, thank you for all of you this morning who congratulated me for the radio show. So, did anybody actually hear it? Probably not, right? Everybody's working, I know. So you'll be very relieved to know that there'll be a link on my website shortly. You can listen to the whole glory hour if you really, but I don't expect you to. But anyways, it was a lot of fun. If you ever get the opportunity, take it. Don't be scared, because it was just like having a conversation in your living room. And the host really held my hand through the whole thing, and so it really was a kick. So, for those of you who already know a little bit about me, you'll know that I've been in the mortgage business for 21 years. Lots of changes during those times. Today I'm going to talk about a specific product, the reverse mortgage product, which itself has been around since the 1980s. It was actually put into place under the administration of Ronald Reagan, and it has been used as a tool. It has a little bit of a bad reputation. Reverse mortgages, I think, because it's scary and it deals with seniors, and there's just a lot of fear about losing your home. So I want to talk a little bit about those fears today and see if I can't give you a little information to help you understand what the program is and what it isn't. So a lot of fact and fiction about this one. But I do own real estate. I have owned a lot of different types of real estate, and I know with Jean being in the business, it's great if you ever want to sit down with one or both of us to talk about your portfolio of real estate and strategies to grow it, then I think that's a great idea for anybody, okay? And I know Ron and I have talked about real estate as part of your retirement plan as well, which it definitely should be. And that comes back to the reverse mortgages, because a reverse mortgage can actually be a part of your retirement planning package or part of your retirement planning tools. What the reverse mortgage, well, you can read my disclaimer. What is a reverse mortgage? So if you're of the age 62 or older, you can take out a reverse mortgage which does not require you to make any payments on the loan. So it's just like a forward mortgage, except there are no payments due. All of the interest on the loan accrues. And then when you move out of the home, at either when you die, okay, in which case Kathy would be taking care of your funeral needs after you pass away, or if you are moved into some kind of a care facility for longer than 6 months, then the loan would need to be repaid. And how does that happen? So we'll talk a little bit about that a little bit later, but you still own your home through the entire process. And if you want to, you can make a loan payment on your reverse mortgage anytime you want. Pay it off anytime you want. There's no prepayment penalty. Keep making the payments, but if something happens in your life, it's already set up so you don't have to make a payment. And the interest rates aren't really that bad. You can either take an adjustable rate, which right now they're running about 3.5% on an adjustable rate reverse mortgage, or you can take a fixed rate, which is running a little bit closer to 5%, just under 5% right now. So the terms really aren't that bad. Who can get a reverse mortgage? Well, I already mentioned that you need to be 62 years or older. There are a few income requirements, and this is different because just recently, last year, they changed this requirement. There used to be absolutely no income qualification whatsoever, and what they found was the participants were having trouble, some of them even paying their property taxes and their insurance. So they changed the guidelines to require that you can document that you have Social Security income or some other type of income so that you can at least make sure that you're capable of covering your basic monthly expenses of property taxes and homeowners insurance. In some cases, we can actually build the property taxes and insurance into the reverse mortgage payment, so it would even eliminate the property taxes and insurance payments, which is, I think, is amazing. So the amount that you can borrow is really determined by your age, the value of your home, and if you need to pay off a loan. So when I do a quote for a reverse mortgage, really the only three things that I need to know is the property address, the age of the youngest borrower, or the youngest person on title, and if there's any outstanding loans on the property. And then I can put that information into a system, and it will give me illustrations, very similar to if you get life insurance or if you work with a financial planner. It will give us illustrations, and it will actually show us if you do the adjustable, you can get this much. If you do the fixed, you can get this much. And if the house is free and clear, then you could also get monthly payments. So let's say you don't want all the money right at once. You can set it up so that you get monthly payment stream that's guaranteed for as long as you stay in the home. Even if it exceeds the original balance of the loan that it was set up to give you, the program guarantees that income stream as long as you're living in the home and haven't moved out for 6 months. Why would I want one? Well, I think we are all getting older. Everybody, even no matter how young you are, we're all getting older. And we all realize that real estate and the stock market and our investments have cycles, ups and downs, right? And sometimes we have people in our lives perhaps that have gotten into situations where they're having trouble making ends meet. And now they're older, they can't just go out and recreate all of this income stream or their assets. And so maybe they need a little bit of help figuring out how to sustain their living situation. That, I think, is the primary reason that people take out a reverse mortgage. We are starting to see with the baby boomers now who are a little bit more financially savvy, we are starting to see that they are thinking ahead, and they're actually putting this as a part of their retirement plan and saying, hey, we're gonna downsize, we're gonna use this reverse mortgage to purchase a house, maybe a smaller house, at a 50% loan to value or something, and then we won't have a mortgage payment, and then we can conserve the rest of our retirement assets for later. Or we can conserve those and we can travel more. Or we can afford our health care, which is getting more expensive all the time. What can you use it for? So when the reverse mortgage gets funded, you can either take a lump sum, a monthly payment stream, or a combination of both. A fourth way is you could set it up as an equity line of credit. So you don't even have to tap into it at all. You can just set it up and then tap into it when you need it. Let's say you have a medical emergency. You have a child emergency, like they're getting married or something. So you can use it to remodel the house. Okay, there's no restriction basically, and it's not taxable. So very similar to if you put money into a cash value life insurance plan and then take a loan against it. It's a very similar thing. It's just secured by the asset that you already own. You take the money out, and it's not a taxable amount. So I already kind of covered this. You can take a lump sum. That lump sum can be used to pay off your existing loan. You can take fixed monthly payments. You can take a line of credit or a combination of each. What's the catch? Okay, well, there's always a catch. There's no free lunch, right? So there is mortgage insurance on this loan. So even if you set up a home equity line of credit and you don't take a penny off of it, there is an insurance premium that gets paid or charged on a monthly basis. Now, it's based on the loan amount, so it is very small if you don't take a draw, but it is there. And there is a premium at the time of funding also. There are settlement costs, so it's like doing a refinance, maybe $2,800, $3,000 worth of closing costs. And then there's an origination fee on these. So there's no such thing as a no point, no fee reverse mortgage, unfortunately. Okay? A lot of us like to refinance our houses that way, but it just doesn't exist. So what I tell people is somewhere between 1.5% to 3.5% of the loan amount is what you should expect in costs. And if you take a fixed rate, the costs will be a little higher than if you take an adjustable rate. So there's a lot of options, okay, too many to cover today, but it can be such a great solution to keep someone in their house if they can't, if they're choosing between paying a mortgage payment and eating, this is a great solution. If you have any questions, I'd be happy to take your questions. Everybody's depressed.
You talked about the adjustable rate option on your first one. How often does it adjust?
Monthly. So let me give you an example, okay? 9 years ago, I put my own mom on a reverse mortgage because she was one of those people in that situation. She had Social Security, she had a very small pension, a couple $100 a month, and she had alimony from my father. Well, my father had a situation where he could no longer pay that alimony, So that income stream was going away. So guess who was making up the difference? Okay, well that can be painful when you're trying to save for your own retirement. So what we did is we found a solution where the reverse mortgage paid off her loan on her house, and this is 9 years ago now. and it was on an adjustable, but you know what her rate is right now? It's less than 3%. So that is not bad. I mean, really, now if rates start to go up, there is a cap as to how quickly it can go up. And let's say that the balance of the loan exceeds the value of her house, which it has not, by the way. Even in 9 years, the appreciation on the property continues to grow slowly. It has peaks and valleys. And the loan balance continues to grow very slowly. And so she still has equity. So if she passes away, or if we need to use that equity in her house, we can sell her house at any time. We can take the leftover cash and we can use that for paying for whatever facility she might need to go to or to help pay for those expenses. If she were to pass away, then that property is in a trust, and the value of that property, once it gets sold, will just go to her heirs as how she is directed in her trust. So the government doesn't take your house. That's complete math. So, any other questions? How am I doing on time, John?
So if you already did a reverse mortgage, can you redo another reverse mortgage?
You can refinance a reverse mortgage. So let's say that your home is appreciated, and remember how I said that the loan amount is dictated by how old you are? Well, guess what? You keep getting older. How does that happen? But we keep getting older, and so it is possible to refinance the reverse mortgage. Or if you want to pay down some, you could pay a lump sum towards it. There's all kinds of different options that are available with this program.
Good job.
Terry?
Do you have a product for an owner that has already paid off their home?
Absolutely. So a reverse mortgage can be used on a free and clear property as well. So you can set it up as an equity line of credit and then just use it when you need it. Because it's much harder to get money when you really need it, right? It's better to get it when you don't need it and then have it available, because when you're in an emergency or a crisis situation, if you're in the hospital and you're incapacitated, you will not be able to get a reverse mortgage because you don't have capacity to sign for it. So don't wait too long. Get it set up ahead of time. Just like all your estate planning, your financial planning, it needs to be a part of someone's overall financial package, not just a standalone thing. So I do this in consultation with financial advisors, family members. We slow the process down so it isn't scary for the senior citizen, because it's very important that they understand what they're getting into and how and what the benefits and what the costs are. So, okay, so I've given you some tools. Thank you so much for your attention.
Yeah.